Hello and welcome to Livewire by Hold Sell. I'm your host, Ali Selby, and today we'll be looking at 4 small cap companies with big ambitions. And to do that, I'm joined by Nathan Hughes from Perpetual and Mike Murray from Australian Ethical. Plus, we've asked our fundies to bring along one company that they believe has exponential growth potential over the years to come. First up, we have Integral Diagnostics, a leading provider of medical imaging services in Australia and New Zealand. It's made 2 major acquisitions recently. Nathan, I'll start on you. Is it a buy, hold or sell?
Look, I think Integral Diagnostics is a hold at this point. It's a sound business. It's suffering at the moment from renewed lockdown volume concerns, but I think what we saw earlier in the year is that volumes, once people are out and about, will bounce back pretty quickly. I think the stock's reasonably valued, sensible balance sheet. I think it's a hold.
Mike, its share price cascaded around 17% after it reported on August 27th. Should investors use this as an opportunity to buy the dip? Is it a buy, hold or sell?
Thanks, Harry. Look, I'm going to go with a hold as well. We really like this industry. And the company's done a good job of improving its margins, but I wonder a bit where to from here in stock price terms. It trades on about something like 25 times. I think it's probably reasonably fully geared for what it is. So I just think we can find better opportunities at the moment.
Next up, we have Nitro Software, a business born in Melbourne in 2005. Flash forward 16 years and it has 2.8 million users in over 155 countries. Mike, I'll stay on you. Is it a buy, hold or sell?
I'm going to go with the buy on this one, Ali. We actually hold this in our active portfolios. We're excited about the opportunity for this company. It meets a couple of things that we look for. It has a global market for its product, and it's a very big market. It has a recurring subscription-based revenue model, and the pricing of its product is quite attractive. So it's coming in under the pricing of Adobe, which really owns that market. So it's a buy for us.
Nathan, over to you. It hasn't been able to turn a profit yet. Is it a buy, hold or sell?
Look, I'm going to disagree with Mike and say it's a sell, but really driven by valuation. I think it's a really interesting product. And as Mike said, it has a really massive market opportunity in front of it. And look, they are delivering strong revenue growth and a lot of that is recurring, but we're not seeing any of that translate into profitability, and continued losses are forecast. So from our standpoint, it's a sell.
Okay, next up we have PEXA, which listed on the ASX in July 1 this year. Nathan, I'll stay on you. Is it a buy, hold or sell?
Look, again, a sell, Ali, but really valuation driven. I mean, PEXA is a really unique business. So they're dominant in the Australian market. They've solved a problem for industry. And we think their competitive position here is relatively assured. I don't think that competition, whilst it's there, I don't think it's going to impact them because of their first mover advantage and the links that they've built with industry participants, be it conveyancers or banks and the like. Some concern that pricing might be kept under check here domestically. And also, I think in today's valuation, you are assuming, I think, probably success offshore, which comes with execution risk and time and considerable investment.
Mike, its share price has plummeted around 12% since it listed. Is it a buy, hold or sell?
Look, I don't disagree with Nathan's comments about the business, except we have a different view on the opportunity, and I'm going to call it a buy. We own the stock, and really it comes back to the fact that stocks like this rarely look attractive on sort of near-term earnings. We're believers in the long-term opportunity, and I think the experience with these kind of platform-style businesses has been, they tend to grow for longer periods of time and at higher rates than might be apparent when they first list. So we like this one.
Last but not least, we have Blackmores. Its share price soared off the back of its recent results. Mike, staying on you, is it a buy, hold or sell?
It's a buy for us. It's another stock we've owned for a while. The things that really attract us to Blackmores, it is one of those companies that has a global opportunity for its product. It's got a strong brand proposition, which we think allows it to generate a good margin and probably a growing margin through time, and there is corporate interest in these style of assets. So trades on a reasonably high PE, but we think it's still attractive opportunity.
Nathan, as Mike mentioned, it's really betting on global growth in FY22, particularly in China and India. Is it a buy, hold or sell for you?
So it's a hold, and probably pre the price spike of late, a buy. It's something we were interested in, but at these levels, it's a hold. Look, it's got all the right foundations. So there's a strong balance sheet. They've got really strong brands. As Mike touched on, there is scope for considerable growth. They've put some pretty lofty targets out for FY24, but look, everything seems to be moving in the right direction. We think the new CEO is putting in place some good plans, and so we think the company is well placed. So it's a hold for us.
Okay, Nathan, we asked you to bring along a stock with plenty of potential today. What have you brought for us?
So I brought a little company called Beacon Lighting, actually. So it's a retail company, and look, no doubt they've benefited in the last 18 months from changing consumer spending patterns. There's no doubt at all about that, but I think there's a long runway for growth here, and that will come from a few different things. So there's continued rollout of their existing store network. There's direct to consumer online. So they're going into new markets globally, which is really in its infancy. And they're also using their existing relationships here and the existing store network to penetrate into the trade channel. So using their relationships with big builders, volume builders, and trying to move down the trade path away from a purely retail path. And the company thinks that could be as big as the retail sales in the next 5 or so years. So I think that's a really big opportunity. The company's grown revenues at about 10% per annum compound since listing, and we think there's a long way for growth ahead. So look, my stock's Beacon Lighting.
Okay, awesome. Mike, over to you. Your time in the hot seat. Can you beat Beacon Lighting? What have you brought for us today?
Well, look, I've brought you something that's quite different to Beacon Lighting. And it's not something I'm recommending as a buy necessarily at the moment, because it has had a very good run, but we do hold the stock. It's a company called Cogstate. Now, Cogstate has come onto the radar recently because it provides testing for cognition. And, you know, really where that testing is used is in clinical trials, often to do with Alzheimer's disease. And you know, the really game-changing event is that there's a new drug that's been approved in the US for Alzheimer's, and that's stimulated a whole lot of new clinical trial work within Alzheimer's. So we're seeing a very good rate of revenue growth in their core clinical trials business. The other thing they've done is they've licensed this technology as almost like a direct-to-consumer test globally. And if you think that, you know, you might go to the doctor in the future and not just get your blood pressure tested, you might get your cognition tested for signs of early signs of dementia or cognitive decline. And so that's a company that I think over a decade has got a very exciting growth path.
Well, there were plenty of exciting small cats in there for you today. We hope you enjoyed that episode. If you did, remember to give it a like and subscribe to our YouTube channel. We're adding new content every week.